Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on Checkmate from Glassnode. Checkmate, welcome to the podcast.
G'day Joe, good to be here, mate.
Awesome. Before we get into the whole ETH debacle, I wanted to talk about the idea of Bitcoin and money. So personally, I think economic systems kind of converge on one money, and Bitcoin is the best money because it has the best monetary properties, immutably scarce, portable, durable, divisible, etc. And I think Bitcoin is the least uncertain good. Do you agree with most of that, or how are you thinking about money and Bitcoin specifically?
Yeah, well, I think the first thing I'd say is that Bitcoin is definitely a teacher. So, I never thought about markets or money or any of these concepts until I came across it. And, it really is one of those beautiful things where it teaches you to think quite deeply about many, many concepts. And, you hear lots of people talk about, money is it's a belief, it's a continued belief that people have to have some kind of faith in it. And in many ways, that's true, right? People have to believe in fiat currency because otherwise you'd be crazy to use it. So it does make sense when you play it through from first principles that the scarcest money will win. When you play it through and, when you look at Bitcoin, especially in the field of the rest of the cryptocurrencies, it does just stand unique. And, one of my friends is a relatively new Bitcoiner, and I was asking questions, actually. It was good. We were at dinner with a handful of fairly seasoned Bitcoiners. And I actually asked the question, why Bitcoin, right? Similar to what you just asked me. And there was a variety of answers, scarcity and energy and proof of work and all this stuff, which is all relevant. But my mate actually had the best answer, and it's because Satoshi left. And when you look at, we'll talk about this Ethereum thing momentarily, but what I've certainly come to realize is I think that's the answer. The answer really is why Bitcoin is in fact unique is because Satoshi left. And and again, people can call it religious or whatever it is, but the fact that it left a void where there was no power and it kind of equalized the playing field is, in a digital world, the only way it can, in my view, actually be. And when people ask me, why do I buy Bitcoin? I buy it because I know it's going to be there in 10 years' time. I know it's going to be there in 100 years' time. For the time of my life, and probably for my kids and grandkids, I'm quite confident that gold and Bitcoin are the two things that are going to stick around. Now, the world's going to be chaos and all through that between now and then. But I'm quite positive that blocks will still be coming in and gold will still be unsolved by the alchemy problem. So when I look at those two things, you've kind of got the forces of nature that just keep this thing, its certainty in an increasingly uncertain world. So when I think about what is money, it's essentially a tool that you can use to transfer your value, right? Apples are no good because they perish. I may not want to trade my apple for your fish at this particular time, whereas you have this intermediate, and again, you play through all of the Austrian economics sound money principles, and it makes sense that you would want for any long-term store of value and transfer of value over time and space, then Bitcoin becomes an extremely promising proposition. It's not perfect, but it's certainly in that realm of, it's pretty damn hard to beat, and it's certainly a lot better than what we have at the moment.
Yeah, absolutely. And I definitely agree with the statement that, Bitcoin is not perfect. It's far from perfect, but it's the best option that I think we have. And so would you agree that in one economic system, it trends towards just one monetary good, or can there be, I know you mentioned gold too, but can there be, a bunch of different monetary goods, or will it normally just trend towards one? Or what are your thoughts? No,
it's a very interesting question. And it's one I've been thinking about particularly since the whole the sanctions on Russia thing, because I think that really opened the door to, we really have to think about collateral now. And obviously treasuries came under the microscope. Luke Groman does a lot of good work kind of profiling what that means. When I look at that kind of problem, there's a Lindy effect with gold, particularly with central banks and nation states. And if they can't save their money in treasuries, I would put a pretty good bet that they're probably going to start using gold. We're seeing, more and more movements in futures markets and the desire to settle oil with gold and stuff like this. So I suspect that Lindy effect will probably carry on at the nation state level. Now, when it comes to Bitcoin, you've then got the El Salvador experiment. So when I look at the El Salvador experiment, there's a lot of good that could come out of it. But then I also have this kind of suspicion in the back of my mind, do I want my government having control over my nation's private keys? That's a scary proposition. Now, I know that El Salvador has a custody solution in the US, but the same principles apply. Bitcoin has its own constraints because of the private key problem. And you essentially need to introduce custodians. In many ways, you have the same problems as gold across a lot of these elements. But at the same time, it's a real pain in the ass to ship gold, right? You've got to stick it on a warship. You've got to have military personnel, costs a couple of $1 million. You really don't want to do that very often. And between the process of settling, you've essentially got a liability to your counterparty. Bitcoin, you can settle that instantaneously, which is a very, very unique property, and it also maintains the scarcity. So I can see these things almost, if I play this forward with the big nation states, I can see them storing their wealth increasingly in gold. I can also see them settling with each other on a semi-annual kind of basis, maybe, but using Bitcoin for those smaller scale settlements, right? We need to just move a couple of $1 billion around for a government that's small change, just send some BTC. Now, that will, over time, become increasingly useful and I would suspect increasingly part of portfolios to execute on these trades, especially when you start factoring in the mining and the flaring of natural gas and things like that in oil, the synergies with energy companies. You really start seeing that this could, in fact, start playing out where oil has a Bitcoin price. So I can see this kind of playing out, and that's kind of my general view on where I see things going. I can also see Bitcoin as like, I've kind of envisioned it's like a big liquidity ball in the middle. I think Jack Mallers and a lot of the work they're doing with settling with Lightning Network is interesting. I've got Apple stock. My friend over in the Eurozone wants euros. I can send Apple in, it gets traded for BTC, zipped across a Lightning Network, swapped out into euros or yen, whatever it is, and goes to the counterparty. So Bitcoin becomes the central liquidity pool that literally everything could be traded through. So there's a lot of interesting things that can happen. Obviously, we're a long way from any of these futures, but the optionality, I think, is so important for Bitcoin. It's certainly got plenty of them, as long as people are open-minded enough to build them.
Yeah, definitely. So I guess, would you say it's safe to say that, like a reasonable portfolio obviously contains maybe a variety of different assets? You might have equities, you might have gold, you might have Bitcoin, you might have other things, but the idea of money mainly trends toward one or two, maybe Bitcoin and gold, like those are the two monetary goods. And so I'm curious, do you see that, and definitely want your honest opinion on this, do you see this is maybe where the idea where toxic maximalism comes from? Like Bitcoiners want to make sure newcomers don't lose money, buying other random scam tokens, Cardano, Ripple, or whatever, when Bitcoin is clearly the best form of money. And from a risk reward perspective, it's, in my opinion, kind of unmatched, especially in the crypto space. What are your thoughts on that? And are you a fan of toxic maximalism or not?
No, it's a fascinating debate, and there's many answers to it, to be honest. I certainly understand where they're coming from, right? And I'm not a toxic maximalist, but I'm pretty damn close to a maximalist, and that is from me having used many of these altcoins, right? And I still hold a bunch of them, but I experiment, understand, and by experimenting and understanding them, my arguments are, in my opinion, certainly better than if I hadn't used them, right? I mean, experience teaches you like nothing else. So in my view, actually experiencing these things and seeing the ups and downs, the breakages, the things that worked, the things that didn't, recognizing the pitfalls is an important part of the process. It's how you formulate, good arguments against things or for things. Now, the toxic maximalism, and I think this is an important debate that's been going on. There's maximalism in general, which is, in many ways, you've come through all your common sense, your rationality, whatever it is, your research. You have come to the realization that Bitcoin is the most viable contender, which is more or less where my camp sits, right? I genuinely believe it's probably the most viable contender. However, I don't believe that negates the necessity or the existence of other things. So a good example of this is the likes of Monero, right? Bitcoin will never, ever, ever achieve the level of privacy that Monero can achieve. In my view, I just don't think it ever can, especially at the base layer, and certainly not in any kind of meaningful time frame. Now, Monero is a tool for the right job. And as an engineer, to me, I look at that and I say, well, right tool, right job. It deserves to exist. It's certainly not a scam. It's arguably one of the most impressive cryptography projects in the world. So when you look at all these things in place, Monero has a role. Now, what would you hold it for? What would I hold it for? As an insurance policy, just in case I need it. I don't need a lot of it because in that event, it will be immensely valuable, right? Or I could use it for that particular purpose. But it's not one of those things that you need at all points in time, right? If I'm storing my wealth, I want something, as you said, with the risk to reward profile of stability and certainty, which is what I get from BTC. So again, right tool, right job. Within that framework, 99.999% of crypto is an absolute, without question, scam, right? Misguided incentives, poorly designed. The reality of the situation is that startups mostly fail, right, generally speaking. So apply that logic. I forget what the number is, but it's 90-odd% of startups fail. A lot of crypto projects, the higher fail rate is actually because most of them are so easy to issue and get money out of, and we're in this kind of Ponzi, fiat, end of state economy, that sadly, there's a lot more of them, right? It's easy to copy-paste, put a new website on it, looks like a new project, retail buys it. So, coming back to the toxic maximalism, it certainly had an important role back in 2017, which I admit I wasn't around for, but I understand from having studied that era that 2017, the scaling wars, the toxicity, and its real genesis. It was around before that, but that's where it really took off, and it served its purpose. It protected Bitcoin. It got it through that very, very challenging test and made it to the other side. Now, in its current format, I understand why it lingers. It's a cultural thing. It's the same reason why people become smokers when they work on a work site where people smoke, because it's a social thing, right? It becomes a part of the addiction. It's why you show up on Twitter every day. Now, the challenge is that I think they're like white blood cells, right? They go and attack anything that's going to potentially disrupt Bitcoin. My concern with it is that it's gone a little bit too far and that the white blood cells are attacking literally everything. Now, that's okay because they're a minority, right? It's not the end of the world and it's always going to be there. You can't stop it. But what I would certainly impress upon them is that, and what I tried to do with this Ethereum piece, I think it's not a hit piece. I made that video because it's a series of genuine concerns that have the research behind it. Toxic maximalists would be so much more effective in their kills if they actually made really, really well documented, and instead of just yelling and screaming about things and calling everything a shitcoin, do the due diligence and kill it good. You know what I mean? Like do the job properly. Stop dancing around the point and actually make your point. Show people irrefutable, become undeniable. Show people that Ripple is an absolute scam, right? Undeniably. If you do that, it's over, right? Game over. You actually can achieve your objective. So my view is not so much that it needs to stop. I think it will always be there, and I think it has a purpose. What I would challenge the toxic maximalist crowd is to say, there's obviously the memes and the fun, which carry on, but there's the other side to it. If you genuinely want to have an impact, understand what you're attacking, because you'll be more effective that way. And second of all, you'll also potentially just work out that there are other things out there. It doesn't mean that you're a shitcoiner. It means that you just understand there's ideas. You can say, hey, maybe Bitcoin could benefit from that. Or, as we're seeing with the Ethereum thing, we're watching a whole governance debate, which we can now learn from. We can watch the chaos that's going on now, take those ideas, take those lessons, educate people who weren't there in 2017 on a very similar mechanism, and take that adversarial thinking and apply it to BTC. So that's my general view, is it's a learning experience. It can be done better. The campaign isn't working in terms of stopping scams, because there's plenty of scams. Just means there's a better way to do it. So stop and review your process and you might learn something new.
Yeah, that makes a lot of sense. When I wrote out that question originally, I kind of thought that would be your answer for the most part, where you think many of them have, great intentions, like they understand Bitcoin, and there are a lot of scams and they're trying to call them out. However, you personally think that they're doing it in a way that's just purely ineffective. And
essentially, I think the campaign is not really working. So sit back, reassess. Again, the memes and stuff are fantastic. It's hilarious. However, the actual effectiveness at convincing people not to buy into scams, as mentioned by the $2 trillion that we just saw wiped out, you got to take a look at yourself and say, did we actually achieve the end goal? And I think the challenge here, and it's a very interesting one. In many ways, it's not a logical debate. It's not a technical debate. And the reason why what I just said before is probably irrelevant is because it's a moral debate. This is if you own anything else other than Bitcoin, it's an immoral position. Now, in that circumstance, you get yourself into there are kind of logical fallacies that you'll end up in that you can't actually explain away. And you kind of back yourself into a philosophical corner where you can't back down from the position because it's a religious one, right? There is no answer to the contrary. Now, again, that will always persist, but it's a religious and a moral debate in many circumstances, not a technical one.
Yeah. You recently published a video that basically articulates why the current status of the ETH Merge, and this is a quote from your tweet, is a monumental blunder. Can you quickly summarize your main thesis for those that haven't watched the video yet?
Sure. So to get beyond the clickbaity title, I do believe it's a monumental blunder. I think it's kind of the end of the line of a series of blunders. But essentially, they've done a lot of work on the engineering side to make proof of stake function. Proof of stake is technologically far more complex than proof of work, both at a code level, at a consensus level, at a number of modules that need to be running in cohesion. It's a complex beast. So you can do all of this engineering work. You can spend, in this instance, since 2016, years and years and years of technical investment to solve this problem. And if you leave a gaping open hole, that means that all of that work is for void anyway, then you're stuffed up. So what I tried to demonstrate in this video, and it's a culmination of many ideas and things I've seen for a long time, and it was crystallized by two events. The first one was the Tornado Cash event, which we'll touch on in a sec. The second one was a tweet that actually Lynn Alden put out, which kind of really just solidified it to me, which was basically a flipping case, which I'm actually aligned with, to be honest. Basically, she's saying, Ethereum could become fully centralized, fully regulated, fully captured, like the treasury market, and the treasuries are bigger than the gold market, right? Bitcoin takes the decentralized gold approach. I think the statistics are something like 10% of people align with libertarianism. I know there's more people coming from different political ideologies into Bitcoin, but generally speaking, that's been the crowd it's attracted so far. So you're talking about Bitcoin having a 10% mind share versus the fiat system, which has a 90% mind share. Bitcoin's going to get flipped, right? So that's the argument. So the Tornado Cash thing to me was new information, not in the sense that it couldn't have been seen coming, but in the sense that it came to light, right? It became a real thing, and now we can actually talk about it and see the ramifications. So what I tried to document in that video was many layers of problems, and essentially they've done all this layered technology to make proof of stake work. But the gap that exists is, can your consensus mechanism in proof of stake be captured, which means that someone else owns that infrastructure? So to kind of lay out the core points, and to be fair, I actually wrote an article. It's not all the points, but it's a good chunk of them. Way back when Bankless didn't even have a paywall, back in their very, very early days, I wrote an article. It was why ETH won't sustain a monetary premium back in January 2020. And Vitalik himself actually responded to it. So, it at least got some kind of attention. And I outlaid a lot of these ideas, right? Basically, Ethereum is constantly changing. There's risk in terms of monetary policy. There's a centralization vector on these apps. And what we've essentially seen play out is the realization of a lot of these risks. They weren't dealt with. So to kind of list them out, the first one, I think, stake was always destined to centralize. Now, in proof of work, if 40% of the miners are in America, 40% are, somewhere in Asia, China and Kazakhstan, and 20% are in, Venezuela, Iran, places like that, countries that America isn't overly friendly with. If you mine an OFAC, if you want to send a transaction from a sanctioned address, well, the American miners, they don't have to mine it. They can choose not to mine it. We saw this with Marathon. They said, yeah, we're doing OFAC. But the guys over in Iran or the guys in Venezuela, they'll gladly mine that block, that transaction. They don't care. Let's go. So they will gladly mine it, and then it's in the blockchain, build on top, carry on. If the government says you can't even mine on those blocks, well, then the US mining industry goes to zero. They move somewhere else, like we saw in China. What happens? Move on. Proof of stake, well, energy is diverse. Energy is everywhere. It's all over the place. And as we know, Bitcoin seeks out the cheapest wasted stranded energy, which is everywhere. Capital is heavily centralized in America because it's deepest liquid capital markets, most VCs, most capital to flow around. And what we have seen empirically is that Coinbase, Binance, Kraken, Lido, all these services that offer convenience to their users that don't have 32 ETH, so they have to pool, users who just want convenience, which is a lot, all the network effects of miner extractable value and all these kind of technical reasons why you earn more, network effects essentially, economies of scale, you will earn more in a pool. There's a lot of reasons why little Timmy is not going to stake, I use the case, ETH could go to 10K, right, which is where the bulls want it to go. 10K times 32 ETH is 320 grand. Timmy, the average person, is not putting $320,000, I know I wouldn't, and I'm technically savvy, I wouldn't put that on my laptop and let it run on my kitchen counter in my cupboard. No, sorry. I'm delegating that risk. Some of the ETH influencers even said, there's a tweet in my video that basically says, watch out, solo stakers. It's possible that OFAC may come for you, the solo staker, and say you can't mine that block. I mean, little Timmy's going straight to Binance and saying, take that risk away from me. I don't want to touch it. So there's a lot of reasons why stake will centralize. And the empirical evidence is it already has. Now, I made a mistake in that video where I said 67% was the kind of point of control threshold. It's actually not. I found it recently, it's 33%. It's 1/3. So that means that Lido is very, very close to being one validator. Now, we've seen this experiment play out in delegated proof of stake. EOS, I forget, there was one that was associated with Tron and Justin Sun, I forget what it was called, but we've seen these experiments play out already. Once you go delegated proof of stake, it's over, right? They get captured, a handful of actors can change the rules. It's a really, really risky situation. So there's a lot of reasons why stake will centralize. Once stake is centralized, it's basically like all the miners being in the same place. Once all the miners are in the same place, censorship becomes a risk. The argument from the Ethereum crowd is that they can then hard fork and basically slash those entities, to which I say, well, if you go and slash 68% of your stakers as the 33%, first of all, where are those rules? What are the rules for what you can and can't do? Who writes them? Who's responsible for that? Isn't that kind of a bit centralizing? And if you do go and slash Coinbase and Binance, that's just all those people who didn't have 32 ETH and weren't technically savvy being slashed by the Twitter guys who've been ETH early adopters for 6 years and have accumulated multiple 32 ETH and stake it on their solo machine. It's a political game where you're basically slashing the pleb by the elites, and you're going to take away their stake because they didn't know any better or they didn't have an opportunity to do any different. You're going to slash them for principles that are subjective anyway. It's a political risk, and my engineering case here is I say, well, there is a potential solution, and that is reshuffle your mining, your staking pools. And the only way they can do that is by shipping the code to allow people to withdraw their ETH and solo stake it or redeposit it elsewhere. Now, that code, if I understand correctly, is 6 months to 12 months away at best. The engineer in me says, okay, put your pride over there, ship the withdrawal code, reshuffle your mining pools, educate people, get Timmy off Coinbase, give him a solo staking option for less than 32 ETH, whatever it is. Solve that problem, then merge. Because at the moment, if they don't merge and the government comes in or any kind of regulations or whatever it is, any captured vector, all you do is you capture 12% of the supply on a beacon chain that you could, in theory, spin up a brand new beacon chain and say, stuff you. It's an isolated risk. Let it go, right? That's your collateral damage, if that really gets to it. But rather than do something like that, they should ship the code, allow people to reshuffle, then merge. But it's political, and I believe proof of stake is a political system, and as a result, it looks like they're going to merge irrespective, and basically they're going to hope that there is no risk. They're going to try and do this UASF if something does go wrong. And I just think that if you go and slash all your users on Binance and Coinbase, they're going to tell their friends they're not buying ETH ever again. They're going to be pretty upset. I think that's a PR nightmare. You took away people's coins because they didn't know any better. And I think that's just not a very good approach. I think that you should deal with it at an engineering level, solve and mitigate the problem, rather than hope it doesn't manifest and go straight in with a nuclear club and hope that that fixes it.
Yeah, makes sense. Having some connection issues, but I think once we upload it, it'll be good. So missed a little bit of what you said there. Even towards the end, but even if ETH, does delay or even cancels the merge, in the long term, can it compete against other smart contract platforms? To me, it kind of seems that if ETH gets too busy, users will just move to other less expensive chains, and there's just kind of competition between these smart contract platforms. Do you agree with that?
This is a fascinating question, and I think I'd posit this at the start of the video, actually. I don't know, for the life of me, what advantage Ethereum's going to have in the proof-of-stake space. Proof-of-stake will not fix gas fees, certainly not out the gate. The idea is that it opens up sharding and these other technological layers. I don't even really touch on the technological side because it doesn't matter. Because if you get captured at the political layer, it doesn't matter what technology you have. But you raise a very, very important point, which is that Ethereum's walking into a proof-of-stake realm where there's Solanas, there's all sorts of other networks that have done the lessons learned. They've already essentially solved many of these problems. There's gas fees. Again, nothing's perfect. Solana's a centralized system. Avalanche is going to have trade-offs. They all have their different trade-offs. But the overall case here is that Ethereum doesn't have a great deal of edge. They do have a lot of technical debt, right? None of these other chains have to do proof-of-stake merges and all this type of stuff. So I'm not really convinced that Ethereum has an advantageous proof-of-stake. I don't think its implementation is necessarily better, strictly, than any other approach. I think they all have the same risk of centralization. I don't know what technological edge it really has. And even if it does have edge, it's going to take many, many years to build out. Now, that's okay because, building out things over time is part of the process. These systems will take time to build. But I do question the logic of actually going proof-of-stake in the first place, especially in light of these risks. Again, I may very well have some of these concepts just backwards and completely wrong, but the thing that was telling for me, and I'm a big person who looks for empirical evidence, right? I like to compare my thesis to the real world. I was, to be honest, shocked, but a little bit disappointed, is probably the best word, at how little the Ethereum community seemed to really... I was hoping someone blew my argument out of the water, just nuked it and told me I was a complete idiot, to which I would say, thank you very much. That's pretty much the best result, right? I want to be dead wrong because the outcome of my thesis is not great. I want to be dead wrong. Unfortunately, I didn't get the pushback from that. So, when I look at the risk that's in front of you, I look at the opportunity, I look at all these things, I don't see the necessity to do this proof-of-stake thing, aside from political, we've already doubled down. They want to double down on the environmental ESG thing, which I think is also a big blunder. There's a lot of layers to it, but ultimately I think it's more political than technological. They said back in 2016 they're going to have proof-of-stake. That became part of the social contract, and here we are. So I actually don't think there's any advantages for them there, but this is part of the game they play.
Yeah, definitely. If somehow the merge, or maybe there's decent odds, who knows, if somehow the merge is successful, how would you still value ETH long term? Because like I was talking about at the beginning, I personally don't think ETH is money or ever would become money. I think there's just too much uncertainty around it, and like I said, I think in economic systems humans trend or converge on one good to be money, and I think that's Bitcoin. But how would you value ETH? To me, it may make sense to do some sort of DCF analysis with fees burning, similar to stock buybacks. I know if you look at shares outstanding for Apple, it's trending down. It's the ultrasound money that the ETHs say it is. However, Apple stock is not money, and neither is ETH. How would you think about valuing ETH from a fundamentals perspective?
Yeah, absolutely. I think it's a really good question. And my case is that from a technological perspective, they've already merged 3 or 4 different testnets successfully, so I suspect that if they go ahead technologically, they'll probably succeed. So I think the merge will probably be successful, which, credit where it's due, bloody remarkable feat of engineering. You can't take that away from them. It's a remarkable feat, so props to them on that. In terms of how you value this thing, I agree that I don't see it as a monetary asset. However, you could argue that Apple is a monetary asset because people treat it as a savings account. So, and this is actually coming back to the tweet that Lynn talked about before. It's possible that you could value it similar to a bond, right? It's got some kind of yield, plus it's a deflationary bond, so to speak. There is a flipping case because you can treat it as a thing that yields some kind of return. There's a fee burn, which also increases, you've got a dollar cost average model on top of a monetary style asset. Do I consider it sound money? Absolutely not. and this is what I really captured in my piece back with Pancless in 2020. The reason why there's a difference between hardness and soundness. Hardness is just the 2% inflation, 1% inflation, deflation. That's just it's a number. It's a measurable thing. How hard is it to produce, more or less? Then there's the soundness, and the soundness is, can someone come in and literally change the monetary policy? There's no argument in my mind that ETH is unsound, because it literally is changing the balance of its monetary policy. Now, the concern that I have, particularly, and I touch on this in the video, is all of the decisions are being made to benefit ETH holders, which people go, hey, that sounds great, but it benefits existing ETH holders. Now, I have a theory or a mental model that I use. They've got this burn mechanism, right? EIP 1559. Now, the challenge with EIP 1559 is it's essentially it benefits the people who currently hold ETH the most and people in the future the least. So here's my mental framework. I believe that something like market cap is a better example of value to society. If a high market cap, you've probably created value. For low market cap, no. Price is irrelevant, because price is just multiplied by circulating supply to give you the market cap. So the price of 42 coin is like $200,000, but the market cap is bugger all. So it's an irrelevant project, so the market cap is worthless, but the price is very high. So it shows you that price doesn't really account for economic value, right? Price is not value, market cap is value. Why we call it valuation. Now, in an EIP 1559 deflationary environment, ignore the actual absolute numbers, but in theory, you could be burning as much as your price is going up. So price goes up 10%, but you burn 10% of the supply. Therefore, your market cap is sideways. You could also have a situation where your price goes up 5%, but you burn 10% of the supply, so your price went up, but your market cap went down. As a result, you can destroy value, but benefit existing holders. That, to me, is benefiting those who are early on ETH at the expense of everyone in the future. You no longer need to create value for society and lift your market cap to benefit existing holders with price. But price benefits those people because they can sell it for more. So that is a mental model I've had for a very long time. As soon as they started talking about EIP 1559, essentially you are benefiting existing holders. Future holders do not get any of that because you're not creating value. In fact, you could let ETH, you could drop the issuance to zero, and all it does is burn, right? No one even uses it, but price can keep going up and up and up and up and up until you get 42 ETH, right? Becomes 42 coin, price is $6 million, but the whole network is worth less than $1 billion. So this, and it makes those holders very, very rich. It's basically last man standing, last man selling, gets the maximum value. So, that's my kind of issue with their whole, there's many other layers, but the balance of power, yes, all these monetary policies benefit ETH holders, but it disadvantages network users and it disadvantages future holders. It's actually an oligarchy problem. And I think that I'm not sure if they don't care or if it's irrelevant. And in many ways, people don't care about decentralization. It's why their coins are on Coinbase. So we as Bitcoiners also need to accept and come to the terms and reality of Bitcoin made the right choices. But the cost, so people don't care, right? That is the price that we pay for keeping our principles, essentially, and keeping Bitcoin a principled asset, which is the correct road to take. We need that, and it's the only one that has done that, aside from, I would argue, Monero, to be honest. Very, very few projects maintain their principles over the very, very long term, but the price of that is that ETH could flip Bitcoin, and Bitcoiners need to get ready for that, but it will come at the price of essentially Ethereum selling its soul and becoming a fully centralized and arguably captured regulatory asset, which maybe it serves a purpose, but it also may not. So, interesting dilemma, but certainly one to wrap your noodle around.
Yeah, those are definitely some interesting points. From a big picture, I guess, perspective, why do you think censorship resistance is critical for the success of Bitcoin or ETH? Yeah,
very good question. Probably more relevant these days than if you take it back a decade. Look at the amount of censorship we see online. Look at the narratives that get shut out of mainstream media, and all of these things. And I think the Canadian truckers event is a very, very good example of this. They shut off people's bank accounts. They shut off people who donated before that was even a rule. They shut off their bank accounts. Censorship resistance, I mean, it may not matter for you and I in the Western world. What about a journalist who's over in the Middle East in a war zone and needs to get out, or is against the government, or all these edge cases, right? It is really, really important for people to have access to sound finance and monetary assets. I mean, you and I, we don't have any say in which countries get sanctioned, right? I've got a friend who's Iranian, right? And he just wants to send money back home to his family. I mean, that's a perfectly legitimate human thing to want to do, and yet it's a criminal offence. So things like this, I'm sure most people who know anybody who's kind of come out of anywhere in Latin America or anywhere in the Middle East, there's countries where you just can't exist in a free society and move money around as you want. You get questioned, you get stopped. So, giving these people freedom and access to these financial tools is, it's a humanitarian case that I find it very hard for anybody except a fiat apologist to really contend with. So, there's many reasons. Sadly, we're coming closer and closer, even in the West, to starting to realise these things. I think this is where I think Bitcoin really stands quite unique. The engineering of it has thought about these things for many, many years. It's always been part of the design principles. To be designing censorship resistance into your protocol at the last minute is crazy. To be designing it in from day one is essential if you want to maintain it. So, and again, Bitcoin has its challenges on the privacy front. That's a big one. In terms of if you want to censor someone, the fact that the Canadian truckers, again, good example of censorship resistance working and why we need it. However, the government seized a good chunk of those funds because there was no privacy. So it works both ways. It is a very, very challenging situation, and sadly one that we all need to take more seriously. And in many ways, people need to actually experience the loss of not having privacy before, sadly people need to kind of be burnt before they understand the necessity of it. A lot of people ask me why I'm pseudonymous. I'm on a video call here, but over time, I have a choice. I can choose to reveal myself because I'm pseudonymous. Once you give it away, you can't take it back, right? So it's optionality, and once you kind of explain that, people understand it more, right? And again, because I'm in the Bitcoin space, people don't know whether I have lots of Bitcoin, but they can assume it because I'm involved in the space if they know who you are. So you get that attack vector, right? So people don't really understand privacy until you actually think deeply about it. Think about the long-term implications. And there are risks, and people in different parts of the world take on far more risk than we do in the West. And often you need to either talk to someone who's been through it or go through it yourself before you fully appreciate why censorship resistance is important.
Definitely. Going off on a different direction, for those that don't know, there's these new companies or protocols or however you want to describe them. One's called Fuji Money and one's called Sovereign Zero Protocol. They're basically trying to create a way to where you can deposit your Bitcoin as collateral and borrow dollars at 0% interest. It's basically an over-collateralized Bitcoin-backed stablecoin. I know we've exchanged comments about this on Twitter, both publicly and privately. What are your thoughts on those technologies? Do you think they can work? Do you think that they can't work? And what are your thoughts on, I know one's built on Liquid and one's built on RSK. What are your thoughts on that as well?
Totally. And look, this is a really interesting topic. I'm really glad that it's becoming more to the forefront. Bring it back to our toxic maximalist conversation before. What I think is the glaring hole in Bitcoin are, I guess you call it cultural awareness, is that we do need to build, for censorship resistance, we do need to build financial applications that give Bitcoin optionality. Because burying your cold card in the back of your backyard for 20 years and then giving it to your kids, that's great. But that's not the end result. We need to be able to do more with it. Now, as you mentioned, basically what you're alluding to is getting into a DeFi basis. Now, we can all debate the term of DeFi, how D is it? There's always going to be centralization vectors of these things, but there's also trade-offs. Now, a big critique I've had of Ethereum is that if your main purpose is moving stablecoins around, whether it's in borrow or collateral, Circle, as we saw with Tornado Cash, can freeze that instantaneously. Do you need fully decentralized rails to support something that can get frozen anyway? Yeah, probably not. So the trade-offs of less centralization, if you're building more centralized apps, then having a less centralized base is probably okay. Now, when it comes to the DeFi systems, as you mentioned, there's different variants, right? Different chains, different side chains, different designs. There's things like drive chains, which is basically an altcoin node. The trade-off there is we require a soft fork for Bitcoin to make that happen, and that's going to take politically many, many years. Does Bitcoin, do we need this stuff? That's another philosophical question. But drive chains, the trade-off is we need a soft fork. It's going to take a long time. I'm skeptical we're going to get the momentum on it. I'd love to see it because I like competition. I'd love to see it happen, but it needs to happen. There's space chains, which I know a hell of a lot less about. I need to do my reading more on it by Ruben Somonson. Now, these things are similar to drive chains, different trade-offs. Both of them, I believe, have something to do with I know drive chains are blind merge mining, which puts the miners into control. You've got like a 3-month withdrawal process. Space chains, as I said, I need to do more work on to understand them, but similar system. Basically, the mining, it basically puts the control of peg-in, peg-outs to miners. Then there's the other option, which is things like Liquid. Now, Liquid is a federated sidechain. What that basically means is that you've got 12 exchanges. Is it better than trusting one exchange? Yes. Is it better than trusting 100 exchanges or 100 different entities? No. But is it more decentralized than one? Yes. So the other one, actually, you can argue, Coinbase and Binance, they are extensions of Bitcoin, fully centralized, but you get optionality. You get all the DeFi services, they may not be DeFi, but you still get to access different services. So Fuji Money, if I understand correctly, and again, I haven't spent too much time digging into the docs. I understand the Ethereum side a lot more, and what I know is that those principles have been borrowed and redeployed on Liquid and Sovereign. So obviously with nuances and tweaks, but the same principles apply. So on Liquid, you've got a federated sidechain. You are trusting a multi-sig system. There was a bit of a debacle, it would have been maybe a couple of years back, where it was discovered that actually that multi-sig was about 4 people at Blockstream that had access to it. So, there's trade-offs here that you are essentially sacrificing. Drive chains and space chains are more decentralized because you're putting control with Bitcoin miners. Basically, Liquid is a completely separate sidechain. I'm personally not a huge fan of Liquid. I think it's kind of bastardized what a sidechain is. I don't think it is even strictly a sidechain. I think it's a misnomer. But it is another option that exists. You've then got something like RSK, which is also one of these merge mine systems. But the system, basically, you can peg in your coins and peg them out. It uses BTC as gas. However, you essentially have a federated peg. So along all these different spectrums, there's layers of centralization. Once you go into the DeFi protocols themselves, generally speaking, the Oracle is going to be centralized, which I'm actually not opposed to, because I don't believe the Oracle situation can be solved in a decentralized manner. The only way you can actually solve, in my personal opinion, the Oracle problem is by essentially having a robust one where you pull multiple feeds and you have checks and balances and things like that, moving averages to kind of slow and make it more expensive to attack, and having those kind of triggers. It's a lot of engineering, but doing something on that vein is probably as close as you're going to get. I think I'm very skeptical of all the chain links and the bands and all these types of things. I'm just not. I don't think they're cryptographically secure. In fact, I don't think they are cryptographically secured in any way, shape, or form. But again, look, you're always going to have centralization vectors. The other big risk is currency pegs. So DAI is a good example from the Maker protocol. They broke their peg to the downside and to the upside. Their solution at the end of the day was plugging USDC in and backing it 1-to-1. Now, that's obviously got centralization vectors. Someone turns off USDC, DAI is done. So that's another trade-off. And if you get a stable coin that has a soft peg, the likes of which Fuji and and what's the other one? Sovereign and deploy.
Zero.
Yeah, there's no question. They may well work until you get big enough that there's an economic incentive to make it not work. So there's always challenges here. And if you get a currency peg big enough, there's going to be a George Soros come along and say, I'm smarter than you are, and I've got more capital than you do. I'm not saying they can't work, but they need to be tested at scale. There's an enormous risk there on the peg. There's centralization vectors on the oracles. There's then federations and things on the peg-in, peg-outs. And again, all these risks compound up the stack. So it's one of those things where I'm very glad to see competition. A blind spot for Bitcoiners is that because they just said Ethereum's a shitcoin, they never spent time watching the DeFi ecosystem evolve, so they have a lot of blind spots on where risk shows up. They haven't seen these mechanisms before, and there's a fear they're going to make the same mistakes and not understand the risks so they didn't experience it. There's also a lot of narrative trust in Liquid because it's blockstream. That's misplaced, right? There's still exchanges. They have the exact same problem I described with proof of stake. Same problem, same exchanges, same 13 validators, same problem. They can halt and freeze and take your money. It can happen, right? So people need to understand these risks. I think Bitcoiners have a blind spot to it. I also think that competition is required, and toxic maximalists should be, in fact, promoting maybe not the issuance of shitcoins, but also respecting that you can have pseudo-equities, right? Someone has to pay to build this stuff, and if you build a protocol and you issue a pseudo-equity, if you do it as a security, a registered one, what's the problem? Like, what's the problem? People can make their own risk decisions, especially if they're properly registered securities. People complain about ICOs. Well, don't do an ICO. Do an actual properly compliant security offering and allow people to invest of their own accord. You may think it's a shitcoin, but this guy may make a whole lot of money. And empirically speaking, a lot of these things have, in fact, given remarkable returns, well over and above Bitcoin. Sure, they get wrecked in a bear market. Bitcoin got wrecked against the US dollar as well. So being reasonable and actually accepting that there's going to be competition, promoting proper pseudo-equities, I think, is a good path to take, and actually do it properly and allow this infrastructure to get built out because you need funding. You're not going to get this through donations, and that's why RSK is taking so long to get built out. It's why Fuji is taking so long to get built out. And they're in a position where they can get funding from centralized entities. So there's trade-offs, there's risks. Bitcoiners, I think, have a big blind spot because of they didn't want to look at DeFi. So we're going to have to go through and learn the hacks, the oracle breaks, the pegs. We're going to get wrecked. Bitcoiners are going to get wrecked because they never studied what happened over there on the other side of the fence. So it's going to be a fun process. We have to go through it. We need to go through it. And, there'll be opportunities and wrecked all the way through.
Yeah, you bring up some definitely interesting points. And, I definitely agree to the extent that, like, Fuji Money and Zero are definitely very experimental, concepts, right? Like, there's no guarantees it's going to blow up, but it's definitely very possible that the peg breaks. The liquid sidechain, like, you can't peg out for some reason. The RSK merge mining doesn't work as intended. So I definitely think there's risk. And on top of that, I think when you use leverage with things like Bitcoin, it's an extremely volatile asset. And if that's your collateral, that's kind of another just very risky strategy in of itself. So I think you made a lot of good points. People can make their own
risk decisions, right? This is my biggest pain point with toxic maximalists. If you believe in the free market and that Bitcoin will win, then just outcompete all the shitcoins. Let the free market do its job. Be better. Because normies come in, they see Bitcoin, they go, oh, it's a dinosaur coin, it's a boomer coin. I'm not, and again, this comes back to the original thing, which is, do we need to build all these things? Well, some of them, yes. And the logic to that is 2.5% of the supply, the Bitcoin supply, is in BitGo's wallet as WBTC on Ethereum. And even after all the chaos of this bear market, most of it is still there. It didn't get unwrapped. It didn't get pulled back onto Bitcoin. There is demand from at least 2% of the supply. That's non-trivial. 2% of the supply on Ethereum working in DeFi. The demand's there. Build the stuff to make sure people don't have to go to Ethereum. Be better than your competition. Let the free market do its job, and Bitcoin will win. But if you don't take that approach, you are going to lose people, right? I mean, people can yell and scream about NFTs. I think most of them are scams as well. Some of them are kind of interesting. My profile picture is an NFT. I think it's great, right? It's something that I just want to buy. I want to buy it because I want it. I just like it. I don't care about the price, right? Some people just like the concept of owning 1 out of 400 of something. It's scarcity. So, if you can cryptographically secure and give Bitcoiners, who some of them do want to buy this stuff, give them the optionality and Bitcoin will win, right? If you call everything a shitcoin, then they're going to go to ETH and use that stuff over there because you didn't give them an option. Give them an option.
Yep. So I know you make videos for Glassnode. This would be pretty much my last question, and we shut it off. I know you make great videos for Glassnode. You're talking about Bitcoin on-chain, Bitcoin derivatives, and you don't have to be direct with this answer, but is the Bitcoin bottom in? Was 17.6K at the bottom, or do we need more capitulation?
Great question. And look, no one knows the future, right? So you caveat by that. But when I look at a lot of there's a few layers to this. So first one is how severe was the bear market? Now, 75% down, people are like, well, it wasn't as severe as previous bears. But when you look under the hood and you look at the magnitude of capitulation from all cohorts, the amount of money that got flushed out of this system relative to market size, even though the market's much bigger, the amount that got purged was just absolutely enormous. We had Luna, and then that final sell-off below the 20,000 all-time high was just monumental. So in terms of the fundamental economics, talk about a capitulation. It was one of the biggest we've ever seen. We came down, and what I actually like, I'd love it to be the bottom because it came down and it touched a model that I'm a huge fan of, just a log regression with difficulty and market cap. And the way I look at that, difficulty is the price of mining. All in, I don't care about there's 10% S9s and some guys in Kazakhstan and some guys mining off hydro. Doesn't matter. It all gets boiled down into one price, difficulty. Now, when you do a log regression with difficulty and market cap, it's like a 0.97% correlation R-squared number. So it's higher than stock to flow, more correct than stock to flow. It just doesn't have the future projection because we don't know what difficulty is in the future, so it's not as memeable. However, my view on that is that it's essentially the cost of production for BTC, the all-in sustaining cost. Now, Charles Edwards done a model. There was someone else, I think maybe even you guys, there's like a gravity hash price. So there's a bunch of different models.
Yeah.
Bitcoin Layer did one. There's about 4 or 5 different models, and they're all in that like $15,000 to $18,000 range. Well, this difficulty price is 17.6 at the time of that capitulation. So Bitcoin came back and retested its cost of production, and it's obviously bounced since. So from both investor behavior, pretty much every cyclical behavior you could possibly ask for, every on-chain metric I'm aware of, forced selling, right? If you gave me a checklist, asked me to write you a checklist 6 months ago, forced selling by capitulation, right? We had 3 arrows blowing up. We had mining hash rate inversion. We had Core Scientific puking 75% of their BTC. What else did we have? It was basically a laundry list of everything you could possibly ask for at a bottom. So if it's not the bottom, then, let's set history. But when you look at that laundry list of things, I wouldn't be surprised.
Yeah, I think I tend to agree. Let's go ahead and wrap this up. First, really appreciate you coming on the podcast. I think this is awesome, very timely, and put out a lot of great stuff. Where can people go after this podcast to follow you, and is there anything else that you want to plug?
Yeah, for sure. So you can follow me at _Checkmate on Twitter. I'm always posting about something or other. But really, if you want to get kind of the bulk of the work that me and my team is doing over at Glassnode, that's really where we put most of our thoughts to paper and to video. So you'll find that over at Insights Glassnode. Basically each week we'll do a report called the Week on Chain, and the Week on Chain is essentially where we kind of show you how to use the on-chain toolkit. We try and show you different concepts. How do you compare derivatives with the on-chain space? How do you look at supply moving around? How do you look at on-chain activity? How do you make sense of the data? We then distill that down into a video once a week. So the newsletter comes out on Mondays, video on Tuesdays. Some people are visual learners, some people prefer to read. So we try to give people enough tools to just understand how to use these things. My big thing with on-chain is that it's essentially edge that Wall Street wish they had. And the average person, a lot of people say that it's complex. It is. but only if you don't practice, right? As with everything. So it's one of those things you learn a little bit more each week, and over time, these concepts start to make sense. And I'm pretty much open. If you ping me on Twitter or any other format, I will almost always respond unless I completely miss it. I'm more than happy to help people kind of understand the tools and get better at it, because I think it gives people edge, even if it's just helping you hodl through the chaos. You understand why and what's going on.
Awesome. Yeah, great to hear. And I'm a big fan of the videos. I watch them every week.
Good stuff. Thanks, mate.
Yep. Awesome. Thanks, everybody.
Pleasure. Cheers.